Okay, I'm gonna do my best to explain this strategy as quick as possible, but also as efficient as possible. We're here on gold. I want to say this strategy is the best on gold. Anything else, I have not back tested as much as I have on gold. So we're just gonna remove the drawings. Are actually, you know what? Let me Control Z and just do another. Okay. So we're here, going to disable all my indicators or any indicators that I have. This is the gold chart, okay? One of the things about gold is it's very erratical. You get liquidity sweeps a lot, you become liquidity, and trades suck sometimes. It's just a volatile kind of pair, right? So the strategy is going to help you figure out where the best entries are, where it most likely will stop falling, so you can start getting your buys back in. And let's go with it. So the first thing I'm going to ask you guys to have is an indicator called sessions. So let's start this off. When you open up the sessions indicator, you can use whatever sessions. It doesn't matter which one it is. I use whatever this one is. I forgot the name of it. You're going to see the Asian session. It's also going to have a London session. I just disable the London session and I only keep the New York and Tokyo session. So it's just Asian session and New York session. What we're going to be doing is pretty simple. I don't want you guys to overcomplicate the strategy. The strategy must be as simple as possible inside your mind so that every day you can wake up early in the morning and execute it without having too much stress on your plate, okay? So let's go right off over here. So this is the previous Asian session, okay? You know what? Since New York's not necessarily done here, we're just going to go back. We'll go back one more, okay? And I'll go on instant replay. Uh, and it's pretty simple. So step one, okay, get ready. Step one is to mark up the highest part of Asian session and the lowest point of Asian session. So you can see there's a lot of ups and downs, but we know that the peak of Asian session was over here, and the lowest point since it finished was over here. Okay. Now, I have my own fib settings. I'm going to go ahead and double click on these, copy these settings. Pause the video right here, copy these settings. This is going to make it a lot easier. Reason being, this is the Asian session high, or let me reverse it. Usually the zero should be at the bottom for me. This is the Asian session low. This is the Asian session high. This is the 50% zone. These are the 618s. And then these blue areas are usually where the market kind of consolidates in between. So you can change the colors like I did. The reason I changed the colors is because the golden zones are like the best buying zones in my opinion. And these zones are just areas that it can bounce up. You can also have buys from these areas. Not so much the blue. I don't recommend just doing the blue as much, but they're all viable areas where the market's going to react to support and resistance. So that's the whole point of these ones. So we marked up the highest point of Asian session high and the lowest point. This is step one, okay? We know that oftentimes when New York session starts, there's going to be liquidity grabs, okay? So this will give us an idea of where the market is going to bounce from. But during news events and different things, the market does tend to go lower than expected. Now, what can we do to avoid being liquidity sweep like this? Normally, we would just buy at the 618, and I'm going to go ahead and extend this. Maybe I can just use it as extend the lines to the left or to the right. Okay, so how are we going to avoid getting a liquidity sweep like this? Now, even though we marked up the high and low with this fib on the Asian session, there's still a possibility that we're going to get liquidity swept, and we can take two opportunities within the day. We should have a risk managed opportunity to be able to take one loss that day and another trade afterwards. So I recommend risking per trade 0.35 to 0.5%, and sometimes 1% if you're feeling risky. But at the end of the day, it's really your account. Trade as risky as you would like. As long as you're not blowing your account, you're doing a good job. So we're going to go ahead and do another tip. So this is the Asian session low, okay? This is the Asian session low. And this is the current point where the lowest point where the market kind of went before New York started. So it's safe to assume for me, if I'm going to be looking for a liquidity grab inside the New York session, I'm going to go ahead and go from the New York low or the Asian session low to the lowest point that it hit before New York session started, which is around here, okay? When I mark that up, I know there's two lines, but you can see which ones these ones are. When I mark that up, you guys can see this became the liquidity zone. This negative 0.618 became the liquidity zone. You can also buy from this zone here. Now, there's two options when you're doing entries, okay? So right now we marked up the zones of how low can this market fall? Where are the good buying areas, okay? We've given two opportunities. One opportunity here, right, which gave us a little bit, and we have another opportunity over here, okay, which is the liquidity. This is the safer one. This is one that's going to give you more returns. But what are the confirmations of entry? Now, even though you can enter off the rip, I personally advise that you have a confirmation of entry. We're on the 5 minute right now. But if I go ahead, and I'm just going to go ahead and just delete this one. Okay, we know the fib is over here. Let me go ahead and oops. Sorry. We know that the fib for the liquidity zone is over here. Okay. Where do I delete it? So, what can we do? We're gonna go over to the 1 minute, and what I'm gonna be looking for is two other steps. We found our areas of interest, which is with the fibs. That's step one. Step two is going to be finding a break of structure. This is going to be our confirmation. So break a structure. Let's go ahead and see if we can find that. So first things first. Before New York session started, we did tap over here. And do I see any break of structure? Kind of right here. Okay, I see a break of structure right here. Now, what is a break of structure? A break of structure is when the market's basically trending down or in one direction. It's making lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. And eventually something comes and disrupts that pattern. That is what a break of structure is. So if I go ahead and delete that line and we can go ahead and we see this is a lower high, we're going to go ahead and mark that like this and label it BOS. I think it's really nice and organized to label things. So you can go ahead and label it BOS. I also recommend if you guys want to mark a line and say Asian low and whatever, but at this point I'm so used to it and I have the color coordination that I don't really need to label it as much. But for your peace of mind, you can do that. So break of structure. We did find the break of structure. That is literally step two. Now there's one final step before you get into your entry, and I'll explain the entry part and how you organize your entry right after. That is to find your fair value gap. Now, your fair value gap is going to basically be, in easy terms, where this break of structure happens, there is a gap within the market that oftentimes wants to come down and be retraced. It will look like a candle that's like a bullish candle. It will look like there's space there. It will just look like an area that the market most likely will want to retrace to. So for me, that area would be between here and probably this little wick. I know it's a little bit harder to see, but this wick over here, probably between there. Okay. So I'm going to go ahead and mark it like this. Okay. And we can see after that break of structure happened, right? At this point in time, it came back to this fair value gap box, entered in and went up. Now this went up from 98 to max 304. So somewhere around 60 pips. That's pretty good. Did it hit any TPs? No. I'm going to go ahead and explain TPs. But this is why I wanted to show you it's important to also mark up the extra fib for the liquidity grab. Now, right off the bat, you're going to be making money from this. Okay, guys? You can see if we entered off the middle over here or even over here, put your stop loss. Just give it some space below where the low was, where it created that break of structure. You're going to give it some space here. But you can see this right here is just like about a 1 to 0.5. It's a 1 to 7.75 ratio, which is not bad. Maybe if you entered off the middle of the fib like some people do. I don't always do that because it doesn't always tap into the middle of the fair value gap, I mean. But if you did, it's a great 2.6 to 1 ratio. That's amazing, right? But at the end of the day, what happens is a lot of the time the market will have some sort of news, and I believe this day it had news, and it will fall. Okay, and this will be the liquidity grab, especially during a downtrend. It's most likely to go down lower. So when we find that area, which when we marked up from the Asian session high to the lowest point before New York session started, we were able to find this area right here, and it went down perfectly and tapped it. So what are we going to be looking for at this point when it taps it? Well, again, we're going to repeat the process. We found an area of interest, step one. Next, we're looking for a break of structure. Okay. So if we zoom in just a little bit, because it's a little bit harder to see, I'm seeing these lower highs, lower highs, lower highs, lower highs. I'm going to go ahead and grab this break of structure line, and I'm going to bring it to over, I want to say here. Okay. This one's not bad either. This one works totally. I'm just going to bring it over to here, okay? So we can see it a little clearer, okay? So it made the break of structure. Now, the first thing that, if you guys remember, we're looking for the fair value gap. The first thing that I noticed right off the bat is that the fair value gap is between this, I want to say, whoops, between this candle, what happened? Oops, cancel. Between this candle right here and probably, I want to say, like the break of structure, where the break of structure line is, okay? I wanted to lower this a little bit. So this is the fair value gap, and you guys are going to notice, did this hit your stop loss? And it's possible. There was volatility. I believe this day also had news coming up. So it did probably want to just do a stop hunt. But the reason why I say to hold your stop loss slightly lower than the give it some space is because of things like this. This was very close. I mean, granted, if you were in this position, most likely you would have been pretty scared, or you would have just been worried that your position was going to be hit. But in this case, it didn't. You know, we gave it some space. Now, how much space would I recommend to be giving? This is a valid question that people ask a lot of times. Well, give it 15 pips for spread. Spread is a huge thing within gold, especially. Sometimes it will not really hit your zone, but the spread will just kind of tap you out. But below where the lowest high of the break is, or where the lowest point where it was of the breaker structure, give it like an extra dollar or so. Okay, so like 10 pips. So total, you're giving it about like 20, 25 pips of breathing room. Okay, and that's about it. I wouldn't recommend any more than that. Um, so yeah, you can see in this one right here, our entry here is at in the middle. Let's do the middle of the fair value gap, which is at 2288.68. Okay, and our stop loss is over here at 2285. So about a 30 or 30 something, 35 pip stop loss. Not too bad. Okay, this is not a bad stop loss. Now, where are our take profit zones? Another valid question, and this one's very easy. All we got to do, all we have to do is mark up or go up to the zones where we had from the fib on the Asian session. So this golden line right here becomes a take profit. This blue line becomes a take profit. This white line become excuse me, this white line becomes a take profit. Blue line, gold line, blue, whatever, all these different areas become a take profit if you want them to be take profits. Now, you don't obviously have to take these blue lines as take profits, but just note that these areas will have consolidation between them. Now, obviously, this is a huge win to reward ratio, but let's see how the trade plays out. I'm going to go ahead and just press play, and let's see how it goes, okay? Now we've already hit take profit 1, we've hit take profit 2, almost hit take profit 3. Maybe you could have taken profits out earlier, but let's see if it can go up to hit take profit 3. Boom, hit take profit 3. Is it going to go up and hit any more? Now we are on the 1 minute chart, so it's taking a little bit slower. But overall, we've already hit a very good ratio. If we could even just scale this down from here to there, it's a 5-to-1 ratio. So this is a really valuable strategy. Now, is it always going to work out like this? No. Okay, you can hold these trades for as long as you want. That's what I like about them as well, because they're in crucial points that really, if it breaks below, there's like a market shift anyways, right? So I'm gonna keep playing it just to see how long it really lasts. If you wanted to swing trade this, you can see we're already on to the next day. You're holding this overnight. Right now, you're sleeping in bed. If you're EST like me, I'm in Toronto, then most likely then you're sleeping over this with your position in. Now, is it going to go to take profit, or how high of take profit is it going to go before it returns down to our break even. At this point, after 3 take profits, I recommend you just put your thing to break even or just slightly a little higher. Up to you. You can also trail your stop losses. Only thing I will say is if you're trailing your stop losses, you're most likely going to be hit. Um, the market likes to go up and down, so profit is profit. But if you want your maximum potential of your TP to be hit, then you will just leave this trade to do its thing, and over time, it will get there. So I believe we're going to be heading on to the Asian session just shortly, and I will do one more example. Hopefully, the next example will be a failing example, or maybe even like a pro. It doesn't matter, but I want to show you guys that this strategy isn't always perfect, but it's normal. It's a completely normal thing that it's not always perfect. So there you go. Finally, it hit our break even at that point. We would have moved our stops to break even. But what did it do? It hit all the way up to our blue line up here, which could become a take profit, but I'm just going to say our golden area here, our golden line. And this is a 6.5 to 1 ratio. Very good trade. We ended up taking from 2088 to 2377. That is incredible. That's immaculate, right? That's very good scale, the numbers, pips, and you could have made a solid amount of percentage from that. If you're risking 1% with the 5 to 1 ratio, you would have been making 5%, which is amazing. Okay, so let's go ahead and find another example. I'm going to go and just delete all these drawings. Okay, and we're just going to, I'll go to a random one so that you guys can see I'm not cheating or anything like that. Let's start over here. Do I want to exit? Yes, I do. Again, I'm just going to scale. Okay, I do not know which one this one is, but we're going to go ahead, bar replay. Do it right before the New York starts. And let's find our chart now. I believe we should be up here. Okay. So this is our chart once again. Now we can see that we're kind of on a downtrend on the 1 minute. If I go on the 5 minute, kind of trending up. We're okay right now. As of right now, this is not a bad trend. So we can keep that under consideration. Now, just because we have this strategy doesn't mean we ignore all the other signs. If there's a downtrend happening like there is over here, we need to be aware of that. So overall, the market sentiment, this is just on the 5 minute. If we go on the 1 hour, overall the market sentiment is looking like a downtrend, right? But we have this uptrend kind of happening. So it's gonna help us, give us some motivation and maybe not maybe motivation, but confidence for our trade for today. So let's go ahead, do the same thing. Mark up from the lowest point of Asian to the highest point, or highest point to the lowest point, and I believe that is right here. So I'm just going to drag this to the side slightly, and I'm going to inverse them because I want the 0 to be at the bottom and the 1 to be at the top. I don't know if that's correct, to be honest, but the fib levels are pretty much the same, and this is just how I do it. So I put the 0 at the bottom and the 1 at the top. I'm guessing if you're shorting or whatever, then you'd reverse. I primarily, with this strategy, like to just look for buys. I'm a bull. I'd rather just be more optimistic about the market than pessimistic, because being pessimistic doesn't always work out. I'd rather wake up in the day being optimistic about the market, hoping that it's going to go up. And if it doesn't, so what? We all have those days. Anyways, so we're continuing on. New York session has not started yet, but this is the Asian session high. This is the Asian session low. Okay, so we're looking for this zone to be tapped, this zone to be tapped. This is also an okay place to buy, but I don't recommend buying all the way at the top here because you have 1 TP. My favorite ones are the 0.5, the negative 0.618, and of course, sometimes the 0, which is just the Asian session low, okay? So let's go ahead and play this and look for a New York session to start. Great, so New York session has started. One thing that I've noticed is it is engaged with the Asian session high. When we look at how New York begins, we want to see how it engages with the Asian session low or high. If it's getting rejected from the Asian session high, is it getting supported by the Asian session low? These are going to be a little bit of confirmations to understand where the bias is. So far, you can see that immediately it started, New York session started. We're getting rejected from the Asian session high. That is going to give us a little bit of idea that the market is looking kind of bearish, but let's continue. Great. So we've already tapped into our first buy opportunity, right? Now, remember what I said, we're looking for liquidity zones as well. So how to find our liquidity zone is to go from the lowest point, or from the Asian session low, or wherever the Asian session high is over here, I guess. We're gonna go from here to, I want to say, let's find like a good level, the Asian session low, and we can just mark it up to the 50%. Okay, this will give us some sort of idea, right? We don't always know where exactly we would find like break of structures or change of characters and things to find that range, that sweet spot. So there's no definite for me, but I do like to use these zones like the 50 or the Asian session low to really find those a little bit easier. Okay, so I marked it up just from the Asian session high to the 50% zone. Now we're gonna see if we can get a buy opportunity here, but if not, we can see near this trend line area, that is where the liquidity, or a liquidity zone, is. If we just reverse this, this should be the negative 0.618, and yes, it is. Let's go ahead and delete it. Now, first opportunity is over here. Now, we found our area of interest, step one. Step two is to find the breaker structure, okay? Now, the breaker structure has not happened just yet, so we can't enter a trade if we haven't seen the breaker structure, right? We're on the 1 minute. It definitely needs to be on the 1 minute. The 5 minute is even better. 15 minute better. The higher it goes, the better. But of course, the 1 minute needs to be a clear breaker structure because it's just such a small time frame. So we can see right here we've already made a breaker structure. Great. Now the next step, like we guys talked about, which is the final step, is to find the break, or not the breaker structure, the fair value gap. Okay, so my fair value gap is going to be right here between, I want to say, this candle low and kind of just like where the breaker structure is. Okay, this is the fair value gap, like this sweet spot. Feel it out. You don't have to always have like, oh, it's the beginning of the second candle of the whatever. Feel out what the market it kind of looks like. Where would that gap be? Now, obviously, if the gap's too big, then you might have a problem with that. You might have to go a little bit, zoom in a little bit to find where those candle gaps kind of feel right. But for the most part, this looks like the fair value gap, and I'm going to utilize this middle zone right here as where I would say the entry is. Now again, we don't always hit the middle zone, so that's why I like to put the entry up here too. I'm a lighter buy or something like that and scale in around this area. But let's be optimistic and say that it's just going to go right in the middle. And of course, we're going to give ourselves some space right here. And our first take profit is going to be here or manual close because we have not swept for liquidity. So when we feel that the market has printed some sort of candle that is kind of intimidating, it's engulfing the other bullish ones, we're just going to pull out with whatever profit we have or set our trades to break even. Now, I just recommend taking profits on this one because you don't have the liquidity sweep happening. But let's see how this trade plays out. Okay, pressing play. I'm going to lower this a little bit to 3 times speed. Okay, and are we going to tap into our buy zone? There you go. So already I can tell that this is going to hit stop loss. And this is why I like to have my entry over here. Now the win to reward ratio, this is a 1 to 2 win to reward ratio. It's not as good. Actually, it's less. It's probably a 1 to 1, almost 1 to 0.5. It's not as good, but we were able to actually get into the market and make some profits, right? So this is our lower risk entry. This is the entry that we get into that we know most likely stops will be hit, but are not most likely, but like there's a higher percentage of stops being hit because there wasn't a liquidity sweep just yet. But also having your entry in this zone would have missed that opportunity. Most likely you would have waited all the time until it got to here, and if we press play, we would have been stopped out just like that. Okay, so that's a suck. That sucks, right? But for the most part, if we would have put our entry at the top like we did before, or we talked about before, then we would have made a 1 to 1.5, which is still great. 1-to-1s are amazing. Don't let anybody tell you otherwise. It's a 50-50. This one you even made a little bit of crumbs on the other side, right? Because it was a 1.5 to 1 ratio. That's still amazing. You made a win. It was a W. Doesn't matter, right? You risked 1%, you made 1%, okay? Um But for the most part, we have now seen that we've been sweeped out. Maybe we took out our profits when we were feeling, it's not that high. I personally recommend from any bounce, I say you should reach for like, I want to say like 80 pips. If you see the lowest point here is 28, then 38 is 100 pips. So I want to say like when it reaches 80-ish pips on this trade, you should close. 100% you should definitely close on this one before the liquidity sweep. But like the sweet spot is like 80 pips, maybe even like 60 pips. Just close your trade, okay? Call it a day. You've seen it from the low here to there. It's not really going to climb more than 100 pips before grabbing liquidity, in my opinion. So, or at least with this strategy that it's shown. So we can see we made some money here. Great. Okay, that's awesome. Now I'm going to keep pressing play. Are we going to hit our extra liquidity area, which was over here? Okay, let's see. So far, it didn't do so. It was, I want to say 20 pips away. So it didn't really happen, but let's continue to press play, see what happens in this trade. Now in this case, we now see a break of structure, okay? So you're probably wondering if we were going to see a break of structure down here. We didn't really see one, right? We had this lower high here that could work and it broke up. But now our fair value gap is kind of in the same place. You guys see that? The break of structure was over here, or it could have been up here. But either way, the fair value gap is in this area, okay? So we would have to wait for the market to come back down before entering, and let's see how it continues to do. I know that we do have some bearish sentiment, so there's a possibility that this trade might not work out. But let's go ahead and try this out again. Now, this is when you get the liquidity, now it's more often that it will hit the 50% zone. But let's go ahead and just be safe. Or because the stop loss is actually a bit larger, I would normally recommend just going like this and like that. But let's be honest, that's a little bit of a steep stop loss. Let's try to cut it a little bit, see if we can get a better entry. Put it in the middle, and then put our stop loss, or give our stop loss some. This over here is easily like a wick that already like sweep liquidity, right? So we don't have to give it as much breathing room as if I were to just see like closing candles like here, like here. This looks like it already wicked down. So we can say if the market goes like anywhere below this, then we're good. So we just give it a little bit of spread space, okay? Now our TPs are going to be, again, Asian session high. I believe, yeah, this one's the Asian session high. And the 1.618 after, to see if we can get almost a 4-to-1 ratio. So 3.88 to 1 ratio. Now let's see if it's going to fall back into our fair value gap. I'm going to speed this up as well. For the most part, it did not fall back to our fair value gap, but it did end up climbing up to go to near TP. At least I'm assuming this is going to break up and go to TP. Maybe not. And did it tap? Not really. So I'm assuming that the reason why this one didn't work, and this is great. I wanted to find something that was kind of not gonna work because I find that we learn better from those kind of experiences than me just showing you. Sorry, there's a motorcycle going crazy outside. I find that these are where you learn a lot better from. Now, this breaker structure was a breaker structure, but I feel like if we went down to the 5 or went up to the 5 minute or even the 3 minute, I like to look at the 3 minutes sometimes. It didn't really look like a breaker structure now, did it? Right? It looked like nothing. This is like nothing is over here. But if we go and I'm assuming go over here, somewhere around here, let's go and go to the 1 minute. Now, if we go over here and where our market breaker structure was over here, this kind of looks where this top area is. This kind of looks a little bit more like a breaker structure. Now, doesn't it? Right here, right? We've had the break up and then it goes down, but even breaks up again high, right? So that looks like a little bit of a better breaker structure, okay? I believe, oh, wait, you know what? That was my fault. I got to move it over here. So you can see over here's the new high, right? It comes down, makes a low, and then it breaks the structure once again over here. Okay, this is where the break of structure is, right? So because it made this break of structure and it continues to trend up, whatever, we are now looking for a fair value gap. And the fair value gap wouldn't be all the way down here necessarily. It could be here. This is another extreme zone, but most likely our fair value gap is actually over here. I want to say where this candle kind of, this zone kind of looks good, and this consolidation zone over here. This is where the fair value gap really is. Okay. So it did, in this case, it did actually tap into this fair value gap. We just ended up marking it wrong. And that's why sometimes, which is great that we got into this, the 1 minute isn't the best all the time to like just, these minute highs are not really reflecting the best case scenario on the higher time frames, especially since the whales aren't really looking at the 1 minute, they're looking at higher time frames. So they want to see something that's a little bit better on the 5 minute. If we go here, on the 5 minute here, you can see that's kind of where the break of structure was more in this zone over here actually. So we had this lower high and then a lower high over here, but then we ended up making a higher high than this one, right? So this is kind of where the break of structure is. It was a little bit messy on the 1 minute, I'm not gonna lie, and I assume that's just because of volatility based on maybe news or something like that. Let's see what time this was. 9:30-ish. Yeah, this was like 9:30, so I'm assuming this is just market was opening, market manipulation was happening, or it was 1 hour after market opening. So it ended up doing that. So the break of structure on the 5 minute looks a little better than what it does over here, right? But this is where the break of structure essentially is, and it comes down. Let's go back into it. Comes down, makes this break of structure. Again, there's a high here, breaks it above. Now our fair value gap is over here. Let's just go ahead and delete this, okay? Our entry is going to be in the middle of this or at the top, depending on how you're feeling. Let's just put it in the middle for now. Stop loss is going to be below here. Now, I'm not putting my stop loss all the way over here. Let me get this clear. Over here, there was a liquidity sweep. I need you guys to learn how to identify when there's already been a sweep in the market and when it's safe to kind of put your stop loss higher than the break of structure low. In this case, if the market was, if we were basing it off of this low, then I would say yes, you can give it some room, whatever. But in this case, this is a liquidity grab on its own. We swiped this, closed above higher than this low, and they're just long wicks. You do not need to put your stop loss all the way down here. It would be pointless. We're going to use this as the reference. We can clearly see this looks like a little bit like manipulation. We're not going to be unless they want to manipulate the market twice, which is rarely the case. We're going to go ahead and just give it some room over here below this low. And our take profit, again, is just going to be right here at the Asian session high and over here at the 1.618. Now, when we played this, it didn't seem like it got all the way up here, but it did come down and give us a re-entry. So we made already take profit 1, which is great. I think this is even smaller than the 1-to-1 ratio, but there is opportunity over here to take more profits. And I have to say that I don't have this enabled, but there should be another zone right here on the fib. That would be like a blue zone. That would also help if your fib was inverted or some sorts. So let's see how it plays out, if it's going to go any higher to hit any of the TPs, or we're just going to go back in. I see that we're already in Asian session, so at that point I would have closed my trades. You know, New York session kind of killed down. But in this trade over here, we were capable of making, I want to say it was a 2.3-to-1 ratio. Pretty good. And I would have closed, personally, I would have just closed after I just saw it wicking and tapping here a lot. This would have been your confirmation to start closing. Now, it's not always going to hit your zones. Remember, I'm just giving you areas that the market is good to buy from, but it's not always going to hit these zones. You have to use your trading judgment to understand whether or not it's a good time to close your trades. Some people would have seen this, and myself included. you could have been like, oh, well, it's just like it's a wedge, you know? And it is a wedge. You're completely right. There's a wedge. But that means a wedge could go either or. Like it could be an ascending wedge where it's just like, oh, it's building up pressure, boom, it's going to go up to take profit. Or if you're in a bearish, overall bearish sentiment of a market, if we go back to the 1 hour, zoom, 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 zoom. Overall, if you're seeing that the market is bearish, right, and we're creating these lower highs and different things like that, and we're wicking in these zones, and there's a lot of, then most likely you're not going to be a moon boy, okay? It's not the smartest thing to be a moon boy at this point. I would say otherwise, if we were in a market like this, yeah, go ahead, you know, give it a shot. We're already, but now we're in this dumping phase where we've seen these changes of character and all these breaker structures and difference. Now it's a different sentiment in the market. You have to base your closing off of the sentiment of the market. That way, you're not being too optimistic and you're not hoping. You're actually using the market and reading the market in that case to close your trades. So, in other words, if this we were in uptrend, then I would have said that was probably an ascending wedge to, you know, give your opportunity to maybe put your trade to break even. Who cares? Or at least into profit or something like that. Maybe trail your stop loss all the way up here, so you're like, you know, at least I make profits at the end of the day. But for the most part, when you're in this bearish kind of market, the smartest thing that you could do is kind of just take profits in this zone, and you would have made a 2.6 ratio, which is great. And that's it. That is really it. If we go ahead and we're gonna do one more, I know this video is already probably like 36 minutes, right? It's cool because I need you guys to like really listen to what I'm saying and kind of go through it. I was gonna make this quick. It can't be 5 minutes. This is not something that you could break down in 5 minutes. But let's go ahead and let's do it fast and let's see if we can go ahead and do this one in less than 5 minutes, which I truly believe we can. Let's remove all drawings. Oops, I didn't mean to do that. I think I removed all the indicators. Move all drawings. I'm gonna go ahead to a secret place. Let's close this. Boom, 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 boom. Over here. Okay, so now let's do this strategy in 5 simple minutes. Now, I have no clue how this outcome is going to be, but I do know the Asian session high is over here, and the lowest point of the Asian session low is over here. Now we have these lines extending. The next thing we're looking for is to hit these golden areas. These are areas of interest. Go ahead and press play. Wait for a New York session to start. New York session started. We're seeing rejection by the Asian low. And finally, we basically have hit the area of interest, which is a negative 0.618. Now, step 2, okay, is to also find a break of structure. Now, before we do that, though, we're going to also label to see if there is a liquidity grab area, which I'm going to go from the Asian session high, or the Asian session low, to around here, which is the lowest point that it so far that it has been in, okay? Okay, great. This is potentially where like liquidity could be happening around here. Let's go ahead and mark it up so I don't have to have 2 fibs. There could be a liquidity grab over here, and now we're cautious. So we have 2 opportunities that we could be taking. Now we're looking for our breaker structure, okay? Any breaker structure happening, there's a breaker structure. So we're downtrending over here. We have this trend over here, but now we end up actually having a break, a structure. It could be either here or it could be here, depending on what time frame you're on. I'm assuming if you're on a higher time frame, maybe that one's better, but either way, breaker structure here. And finally, step 3 is to have that fair value gap box. I want to say your fair value gap is here, entry in the middle or at the top, whatever floats your boat. We're going to just put it in the middle to see what happens, or maybe take some light buys. It doesn't matter. I'm just going to set this here. Take profit 1 at the Asian session high. Take profit 2 will be over here at the, or Asian session low, my bad. Take profit 1 or 2 will be here. Take profit 3, etc. Okay, is it going to go that high? This is a 20-to-1 ratio. That would be absolutely crazy. Again, oops. Right there you go. Now we're going to put our stop loss slightly below here. Now, because we didn't sweep liquidity, is it going to do this? Probably not, but we'll use our judgment to see when we're going to close. I'm going to go ahead and put this to a 1-time speed. We're gonna go to play. Okay, these candles are printing. We haven't hit our fair value gap box just yet, so we haven't even got into an entry. It has to come a little bit lower to hit our fair value gap box. Okay, so at this point it's tapped it. We're in the trade, okay? Now let's see how high we can go. If I start to see this engulfing, there. So before I press pause a little late, but when I seen this candle print, I would have closed my trade. Okay? So even if we would have had a little bit of drawdown, I would have personally closed my trade right there. Right, you should have closed your trade around there. The reason being is because it's an engulfing candle. It's just it's bigger and we're at a higher risk setup. We're looking for it to just fly up, make our 50 to 60 pips, 50 to 80 pips max, and then get out. But as I started to see this bearish pressure happening on the 1 minute, immediately I cut my losses sooner than later, okay? Which is great. Now we know this trade has failed, whatever. We took some pennies of losses. It's cool, we can move on. Why we have risk management. And we know that down here is where the next buy opportunity is going to be. Let's wait. Let's wait. It's gone back into our fair value gap area, meaning this is a pretty valid fair value gap, but we're going to go ahead and remove it for now. Okay, so we have now hit our liquidity grab area. I'm not too picky, guys. Even though it hasn't really tapped, let's be honest, from here 95 or 96.30 to 95, it's like it's like 10 pips, not even 10 pips, type thing. So we got to not be too picky. It has hit that area. Maybe you can go a little bit lower. Let's see if it's going to hit it even better. There you go. Now it really tapped. Now it really tapped our area, okay? A lot better. So next thing we're looking for is a break of structure. I don't really want to count this as a break of structure right here. Even though it totally is, I would like it to break above here first, okay? Let's see if we can do that. There you go. And it's breaking above there. Next step is to find our fair value gap. We have our break of structure right here. Done, right? Break of structure right here. I'll label it. Next thing is our fair value gap, okay? Go ahead and grab this, and I want to say our fair value gap again is between this zone right here and yeah, maybe like this candle here to like around here. And the way that I'm spotting this is again, I'm feeling it out. I'm seeing this wick over here. I'm seeing this consolidation zone over here, right? You can mark up from the high point of the consolidation to the low point, right? That's what I'm doing. I'm feeling it out. So this is our fair value gap. Let's go ahead and we can label this too. Done. Now, as we press play, what's going to happen, first of all, we should set our perimeters. So it'd be something like along there, you buy here, you buy here. You put multiple entries in. You buy at this 50% zone, you buy here, and you can also buy at the bottom of the zone. Anything below that, you're kind of just fucking yourself because it looks like it's going too low. So let's go ahead and put our buy order here. Stop loss, give it some room below this low. And now we're going to put all our take profits, blah, 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 maybe go to the moon over here. But for now, we're going to keep it by eye, okay? Let's press play, see what happens. Okay, is it gonna fall? And it looks like the market's just bearish. So in this case, we took an L today. There was nothing to do about it. It didn't happen. The market's looking overall bearish. It didn't really care about anything that we wanted to do. Now it's creeping back up. You can see that it's just like you can see that there's a lack of strength in the market right now. It's not pushing as much and it's just getting rejected. So in this case, it was a valid trade. It was a valid setup, but the market is overall bearish. So that is the trading strategy. I want to show you guys the wins, the losses. It doesn't matter if you're not winning. It's not because you're not doing the strategy right, because the strategy should be simple. It's just because sometimes you lose. But when you win, again, you lost your 1% here. The other trades that we had were 5-to-1s, 2-to-1s. They will recover your losses as long as you stay profitable. So I'm glad that I got to show you guys the wins and the loss sides, because it's not all pretty in trading, but it makes you comfortable to see both sides of it. That way you know that, oh, this guy's he showed me all these wins and I'm taking these losses. Like, this is No, this is perfectly normal to be losing. At the end of the day, that's just how the strategy works. And I hope that you guys got a grasp of it. This is a very long video. You guys can skip through it, whatever it is. But yeah, take care, guys. And message me if you have any questions about the strategy as well. I'll be glad to help you guys. All right, take care. Love you guys.